wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M Plus Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Hi, good afternoon, everyone. Welcome to M Plus Wiz Pro Highlights for today. And today we have again myself, Louis, will contribute the ideas on what is happening in the market, and let's see what we can find out from the market today. So as usual, we'll go through the market situation first, and we will see what can we decipher out of the sectoral picks for the time being. As you can see in the table itself, it's very clear cut that everything seems to be all right, except for healthcare and also construction sector. So healthcare, I think not to say much. A lot of people are more optimistic about the Omicron variant, and they are less likely to go into drill down to these concerns anymore, but more towards a recovery play from this Omicron variant, because people say that the symptoms might be less severe as compared to the previous variant, and therefore we are looking into some of the ASP to continue further to decline further going forward. And you know that the Top Glove result has came out last Friday, and it wasn't as great. So I think it will continue to stay within this range or even lower for healthcare counters due to the idea of glove ASP is going down further. Okay, and the other one, it's construction sector. You can see that some of the drags lagging players are Gabunda, George Ken, Persona, GDB. So what we suggest right now is you can actually look for construction sector in the upper side. Okay, like for instance, EcoVest. Today we have put in under our M Plus wish list, but it didn't trigger us. Just that it is coming to our attention to say that why do we put construction counters into the recovery team play is because right now everyone can start work, and there is also a lot of people traveling, and they have Duke Highway. So Duke Highway is quite profitable. If more and more people or more and more passengers are getting in out of this using this toll, that would actually benefit them in terms of their earnings. So that is where we see some light at the end of the tunnel. So overall, I would say that in terms of the table wise, I would say that the strongest sector is this one, transportation and logistics. A lot of people are looking it as a recovery team play. Value chain wise, economic value chain, you definitely will need transportation and logistics companies by who or by crude, because during this period, a lot of these freight forwarding companies, and also the idea of higher charter rates and higher, all these postal services orders and whatever not, demand is high, the charges are high, and therefore that should translate to earnings for the transportation and logistics companies. So that is the idea under this transportation and logistics. So economic recovery will benefit them. Okay. Next is plantation and financial services. These two are 0.9% higher for the session. As I mentioned, quite a lot of times throughout this period, is due to we can actually take note that December month is always a good month to hunt or to look out for trading opportunities using the window dressing period, window dressing catalyst. So FBM KLCI has over the past 20 years made 17 times in the positive territory for the KLCI, and average return is around 1.8%. So this morning I gave a briefing to our dealers to say that the KLCI right now is down around 1 to 2, near to more than 1%, and also near to 2% in the month-on-month perspective. So in order for them to climb towards 1.8% or 2%, it will be around 1520 to 1530 level. Okay, so that is the first idea. So right now, it seems like it has fallen quite a bit, 2%. And if we are able to see some recovery from the bottom position, at least up another 2%, I would take the opportunity to look out for plantation and financial services. So these two are the sectors that is heavyweight of the FBM KLCI. So if you are trading on these two, I think you most likely will be able to make some good profits. Okay. So other than that, we can also check out CPO price. What is the CPO price right now doing at? Right now it's 4828, and that is actually quite helpful for the plantation counters, because as long as the current position is still above 4,005, 4,000 level, the plantation earnings will continue to stay strong for the next quarter. And bear in mind, a lot of plantation counters has been providing good dividends because they are cash cow. So dividends is one of the main catalysts for plantation sector at this juncture, at least if they're not trading in a growing exponential mode in terms of their share price. At least the dividends are attractive enough for people to buy. Like for instance, recently Ta'an also having similar kind of progress. They are not really selling off in terms of share price, but instead maintaining the share price at this juncture. Okay, so before we go into our daily picks, make sure you have liked the video. Make sure you have shared the video out in your circles of friends. Make sure that they are also benefiting out of these highlights of market highlights, especially when we are giving these highlights per weekly basis. And also, what is the benefit of sharing out the video is because the webinar is because once you have the sharer badge on top of your name, then once you put in any questions, we'll take your questions from that point. So if you have the sharer badge, I will be able to review your stocks, your questions later on. If not, then we will pass on your questions. Okay. So do like us and also share this video out going forward. Okay. So coming back to our topic on M Plus Wiz Pro highlights. So what is the daily picks for today? Let's see. Let me share the screen again. So today we have put in several counters. Can you see my screen? You can see my share screen. Please put in a Y to say that yes, you can see the screen. Okay. So a lot of times we are quite confused in the market because of market condition is not as great. as before. That is due to after budget, we have seen the trading activities being lower, and that is contributed by this budget 2022 imposing two things. One is the Cukai Makmur, and second thing is the stamp duty changes on trading of stocks, and that is so-called hindering the funds or institutionals or even retailers to come in to take up the shares in the stock market. So that's why uh, stamp duty changes is not as as attractive at this moment based on market participation rate. Okay, so what we can do in the stock market always is look for uptrend counters. So that is why uptrend counters like this, like Encom, uh, can be one of the good favorable counters to look out for. Why do we like Encom? If you look in the daily chart, it's definitely uptrend position. It has pulled back quite significantly from the recent peak to the lowest range of the recent part of the day is around 18.4%. Uh, we after the rebound of becoming hammer candle, it has breakout above the uh, hammer pattern above the 2 ringgit and 70 cents, and it has continued to climb higher over the past 4-5 days. Okay, so in this current moment, you might be thinking, hey, do you think that Louis, maybe this counter is making triple top formation and it might collapse? Yes, you are able to say that, but again, we are basing on the idea of if we are entering right now, where are we cutting loss and what is the target or what is the opportunities that we have. So definitely we are looking into first target as 3 ringgit level, and the cut loss point is perhaps around 2 ringgit and 77 cents. Okay, so for today. But we have put in actually the stock in the morning, so it has triggered us a breakout entry around 2 ringgit and 86 cents level. I would say that, and it has cut loss point is around 2 ringgit and 75 cents. So basically, you have around 11 cents to 12 cents of cut loss position. So once there is a breakout, you have taken a position with the idea that you are going to lose the money just in case it broke below the 2 ringgit and 75 cents, and that is a risk. So what is the target range that we are looking at? Definitely is around the 3 ringgit level, first of all. And if you look into this sideways ranging mode is around 250 to 3 ringgit, so it's around 50 cents. So and then if there is a breakout above the 3 ringgit zone, then the next target will be located around the 350. So most likely, if we are trying to pinpoint an entry, it will be here, and your cut loss point will be here. Okay, so your first target, maybe you want to take some profit, partial profits around 299, you may take it. And then once there is a good breakout above the 350 level, then even higher, even better, then you can trail your profits upwards. Okay, so that is the whole idea. How are we going to take a position? How are we going to cut loss? And take the idea of if they are able to break above the 3 ringgit level, where is the resistance level? So that is the whole idea. So the trading plan must consist of the cut loss point and the target, and make sure that risk and reward ratio is above 1.5 to 2 portion. Okay, so that is Encom. And why do we put in NILEX? Is also quite similar. It has been in our radar as well, because Encom and NILEX always are in tandem. They are always following each other because they are a sister company. So so that's why the recent days it has actually been making a good progress in terms of the good sideways ranging mode. First of all, the ranging market here, and it has you can see this as a symmetrical triangle formation breakout with some good volumes here. Pullback one day last Friday, then a breakout above this two bars here, and it triggered us a signal today. So where is the target? Definitely it's previous high. Target will be here. Whether you can reach or not is another question. But based on what we can see right now, volume has been picking up, then declining on Friday, and then picking up again today. So it means that the chart pattern seems like quite genuine, and we are looking into further upsides. Okay, towards 142 or even higher. So that is just the idea of Encom and Nylax. But what about others like FGV and also Hibiscus? Because we have also noticed oil prices, crude oil has been collapsing after this Omicron uh, variant being emerged, I think 2 weeks ago, and then it has collapsed around to 65 for Brent oil. But recently, it has actually come back towards above 75. So currently, it's trading at 75 US dollar mark. Let me check whether it is, what is the rate right now for Brent oil. Okay, it is 76. So which means that there is a good rebound recovery position, and it is holding above the SMA 200 level for the crude oil price. So I think there is a very good chance that oil and gas counter might be also good under this scenario, under this month of December, and perhaps you can actually trade on hibiscus from this point onwards, because it is very likely to tap along with the recovery in terms of the crude oil. Okay, so it has collapsed from the one near to one ringgit 97 cents zone. Highest point, sorry, 91. 97, let me check again here. So the highest point is 97 cents. Yeah, 97 cents. It has dropped towards 69 and then recover back above the EMA 5, and today it somehow replicates something like called the flag formation breakout, but it's still not that confirmed yet. But I would say that it is an early entry that you need to hold on to it, at least if it is not breaking below the support of 73.5. I say that this is a good sign of heading higher kind of formation. So our next target definitely would be around 70, perhaps 78.5, 83 towards 86 cents level. Uh, I'm not saying that it should cross over towards this 86 cents because based on the chart pattern wise, it needs to actually retest these few ranges before it can go on a very strong bullish run towards 86 cents and above. Another thing to take note is if the crude oil price is still holding around 70 plus, I think the impetus of people buying into the counter may not be as decent. So once this crude oil can sustain above 80, then perhaps we can see for the upside. Okay, give me a moment. I need to take some water. So that is the idea on hibiscus. Why did we put in today? Okay, so oil price is up, and that's why I put in. FGV, we have put in this as well. Today we have a technical focus, technical piece on this, but it didn't really surge higher yet. Although I would say that it is waiting for the chance to break out, it still needs some time to clear off some resistance along this level. So 145, 155 definitely is a trading range bound mode within this level. Then if there is a breakout over 155, then perhaps 164 is the next target. But if you're entering right now, the risk to reward ratio is quite interesting. It's quite attractive. And if it is able to come back towards 145, 148, I would say that that is a very good chance we can see a good support. And then if there is a good opportunity to buy along this level here, accumulation would be seen, and it should not cross below this 145 in the near term. Okay, it should not cross or violate below 145 in the near term. Based on the indicators wise, it is quite attractive, and very likely it should trend higher. Okay, so FGB is also based on FCPO price. If CPO prices are looking into stabilizing at least above 4,005, I would say that the plantation companies will be benefiting out of this situation until February. Okay, because February will record the earnings from these 3 months, October, November, and December. So if they are able, I mean, the FCPO price can sustain around 4,005, 4,008, then that should help the plantation farmers. Okay. So a lot of people might not want to trade, plantation because they don't want to go through this volatility. What you can do is always buy ahead of the earnings. Like for instance, you know that normally when you can see that the price or the result is always coming out after the every 3 months. Like for instance, like FGB is coming out on February. Normally, people will start to trade ahead of February, and once the result is out, then it will sell on the result day or after results. So that is how you are expected to trade, during this period of time. Like for instance, this round, the recent 2 rounds also similar. Buy ahead, then sell on when the news is out, results is out. Okay, buy ahead, sell on after results. But this doesn't really give you any profits, but it doesn't give you any huge losses as well. But normally, generally speaking, if you are trading on plantation counters, you can go for this kind of strategy because you know that the results is likely to be good based on the CPO price. Okay. So before we go into any other stocks, remember to share this video out and put in your questions. Then I will review your stocks later on. Okay, for construction we have two. One is EcoWest, one is Eureka. So Eureka continues to trend higher, and it has been quite positive since we have put in last round. I think last week, since around 67 cents level. I think last week we did mention about this counter as well. And it continues to trade higher from this 67 cents, and you continue to hold on to it. It is around 71.5 cents right now. If we are looking at a broader view, this might be a good potential of resistance breakout. This could be a symmetrical triangle formation, anticipating for a breakout, strong breakout from this point onwards. But you also have to understand that there are certain resistance, very significant resistance that they need to breach through, which is 73.5. So if you are already holding it from since last week, I think 73.5 cents is definitely a place to cut away or take profit first before a strong breakout run. But if there is a good breakout run, then where is the target that we are looking at? It may be looking at around this level here. So let me draw this pattern. So this is the preceding run before it it consolidates throughout this period. So next target will be located around the 96 cents towards 1 ringgit zone. So I would need to see some good sideways consolidation phase first before we see further upside towards the 1 ringgit zone level. Okay. EcoWest, the same much as we have mentioned about this. It is related to construction and also recovery team. Basically, what we are anticipating right now is a good recovery and earnings that will come in for EcoWest. And secondly, we are anticipating that the construction works to continue from this point, and that would also translate to earnings for EcoWest. So both sides, recovery team, in terms of their Duke Highway being, a lot more people are using it. First, that would generate some earnings, some revenue for them. Secondly, is that the construction works that can being, put under their results going forward. That will also help them in terms of their results. So EcoWest is under the construction sector and also Eureka. So other than that, we also find LC Titan and also Teosing quite attractive due to the recent recovery theme as well. LC Titan has been down despite the strong results. But recently, there might be some good opportunities because of this higher low formation, and we can take this as one of the opportunities to anticipate a short-term breakout at least towards 240 level. And if we are able to see the 2-bar breakout today or tomorrow, that 240 will not be too far off from the timing, okay? Too far from the target for LC Titan. So 258, 266 is the next target that we are looking at. And we perhaps will be able to monitor whether there's any good breakouts or not. Certainly, this is already an oversold position and waiting for the recovery mode to come in, and technical rebound might break out above the 2-bar high, which is around 228 level. Then next time will be around 240. So your cut loss point roughly is around 2 ringgit and 20 cents. Okay. For another daily pick we have is this Teosing. Teosing after the results has gapped up, though it is still hovering just sideways and not much of movements. But going forward, we are likely to see that all these egg prices, all these chicken prices are getting more expensive going forward. So in that sense, we might be able to see further rebound recovery in terms of their price, and also the earnings should recover in tandem with the reopening of economic activities going into 2022. Okay, so that is the whole idea on Teosing. Although right now it might be too early to enter, but it may be also a good opportunity to trade when the liquidity is slightly lower, and hopefully our next target 83 cents will be hit very soon. So this is Teosing. Okay, so these are some of the daily picks that we have. We have another 5 to 10 minutes. So if you have any questions, questions you can actually put into the comment section, and make sure you have a sharer badge. Then we are able to take your questions. So yep. Before we go into the Q&A section, I haven't seen any sharer badge with questions yet. So I will wait a while more. In the meantime, oh yeah, so that's one question. Okay. So ATA IMS is very interesting. After the Dyson has already taken out some of the contracts early on, and the market has the share price has collapsed. Okay, from 2 ringgit 50 cents to around 40 cents recently, and that is also giving us a signal that a lot of people have already dumped the shares, and right now is a fresh start for ATA IMS. But a lot of people say that, hey, they don't have any contracts anymore. So what is left, in ATA IMS right now? So given this situation, we can only rely on technical analysis. We can't really rely on fundamental. And technical analysis is telling us that the 52 cents level is quite strong resistance, but it has retested on this day. It has retested on this day, which is 8th of December, and then it has tested and also crossed above this 52 cents level today. So what does it tell us is, what does it tell me? It is that this could be a good opportunity that people have already sold, that want to sell, they have already sold, and people wants to buy back. It has retested one time, and right now they wanted to buy at 52 cents, unable to buy because the share price right now is at 55 cents. So given that scenario, it is definitely oversold. Right now it's on a recovery path. So let's see where it can land us a good signal to sell off. But based on the gaps here, right, 52 and 82, I think there is an opportunity to continue to trade towards this 82 and also 90 cents level. I would say that this would be a very conservative range for ATA IMS. So according to some of the articles right now, it says that Malaysia is also looking at the labor charges on picking on ATA IMS, and perhaps ATA IMS may need to pay fine. But that is not the most important part of things. It's actually the previous article saying that, hey, actually we didn't force them to work. Actually, we are giving them an opportunity to rest, but they say they want to take up more jobs during the weekends, and that has been an argument, okay, or discussion between the activists and also ATA IMS. So right now it seems like it's not all ATA IMS fault, but at least we can see that that Ata IMS is telling people that hey, we did not force them to work, but at least they are really they really want to work overtime and therefore they want to make more money to go back to their hometown. Okay, so yeah, so I believe that RTMS has a good chance because of this today's bar is above 52 cents level. So if you have any uh, you know uh, positions in this, you have to take note of this lowest point of this bar is 44 cents and also 52 cents. 52 cents is the first support, 44 cents is the second support. Okay, so next target will be around 82 to 94.5. So I believe there is still a chance to trade on RTMS, and right now a lot of places are actually reopening, so it means that they are able to get their workers back. Okay, so I think RTMS is one of the good bottom fish company for the time being. Make sure you have your cut loss point intact at 52 or even 44 cents. Okay, next we have me and revenue and also SSC. Me is on a downward trending path, not so exciting yet, but again we can see that technology stocks is recovering in the US, so we just have to wait for a little bit more based on uh, the idea that if interest rate really kick in, then it should not benefit technology stocks for the near term at least. So people would move into cyclical stocks because of recovery team play. Because interest rate hike means that cyclical companies are actually in play, then me or technology stocks might not be favorable. Okay. At this current juncture, I still monitoring on this. I'm still monitoring on me Technovision, and I think the trading range would be around 314 towards 356 cents, without any strong catalyst for me right now. Okay. Wait. Someone said my screen is not showing me. 5286. I am showing me, right? This is me. Am I me? Correct. I'm showing that right now. Can you see my chart right now? Let me. Oh, someone say it's not showing me. Interesting. Wait. Let me change another counter to see whether is it changing. Let me show you revenue right now. Can you see revenue? Okay. Okay, someone can see. Okay. So in summary, me, it's not a decent in terms of the trend pattern, chart pattern right now. But trading range, if you want to trade within this 314 towards 356, that would be the max for now. Okay, I don't see a strong catalyst for me equipment right now. Other than that, revenue is also quite on the downtrend. I think after the violation below the 1 ringgit and 78 cents, it has collapsed towards around 140. But recently it has been stabilizing around 140 towards 1 ringgit and 56 cents. So I think that is the good range to trade and to pick up the shares after a decent sell down. So overall, if you want to accumulate the shares, I think right now is the time to accumulate. But whether you are paying a lot more higher in terms of the P multiple, whether the earnings are coming back or not, we still need to do some homework on this. Because revenue is really tying a lot with this recovery team play. And if we are able to identify whether they are selling more terminals to the retailing industry, then we are able to see further upside. But if not, then we are only just trading on the rebound play. I don't see a strong catalyst going forward until they clear out most of the they can grow more than expected in terms of earnings. So recovery is still very vague as a broad general term in economic activities, because we know that it will recover, but at what pace, that is more important. So revenue right now is on downtrend position. If there is any rebound, it would be around 1 ringgit and 66 cents towards max is around 1 ringgit and 78 cents. Okay. So last two questions. One is SNC. Okay, SNC is under the furniture related. I remember recently a lot of furniture related counters has been, making good moves. We have also been putting in SNC in our stock list, but just that it has a lot of volatility. Like for instance, it has a very strong gap of position. Then after that, after the bonus issue, it has been volatile. People have been selling down. Then again, from there, it picked up again from 58 cents back towards 66 cents level. To me, this is a very interesting chart, and it's great that it is still forming an upward trend, higher low position, and it is still not making a very strong progress breakout yet. There is one time to try to break out here, but it was resistance around this level, pull back, and then again, right now it's still retesting range of 67 to 68 cents. So I think this range, once it is able to cross, there will be only upward trend from this point onward. So I see a very good opportunity to SNC. Right now, if you are trading on this, your cut-loss point is located around 62 cents level. Okay, 62 cents. Then I would say the target will be around the 76 to 80 cents level. That would be the range that you have to monitor for the upside. Make sure you take profit when you are at that zone, okay, in that zone. Okay, Amilus, under the tech companies should be at a sweet spot going forward. Very likely that they are not really affected by the Chukai Makmur because of the MSC status, Pioneer status. Technology will always get that kind of benefits, okay, because of R&D allowance and things like that. So if you ask me on the technical point of view, it has broken out earlier on around 1 ringgit and 13 cents, pull back 2 days. Today there's a rebound, soft rebound and short rebound, but let's see if it can continue to gradually go up towards 1 ringgit and 36 cents. Then next target will be around the 1 ringgit and 1 ringgit and 36 towards 1 ringgit and 40 cents. I think that will be the range for next few targets. Okay. Okay, last counter, Aneka Jaringan. Aneka is under the I think construction sector. ACE market, it has been all the way down. I mean, there is some time, after the IPO, it has continued to go up to 37.5. Building materials side, I think it's not as decent right now, but you can try early. I mean, right now it seems like a decent point to enter, but make sure you have a cut-loss point set around the 17.5 cents level. I see that if the share price were to fall below 17.5, then it is still not considered as great move yet. But unless it can surpass the near-term resistance along the 18.5 cents level, then next target will be around the 22 cents level. Hopefully that the technical rebound will come in to gain you some money. Okay. So all in all, I've summed up the Q&A section here. I will sum up the Q&A section, and also I've talked about the daily picks. You can go into traders list just in case you don't have any trading ideas. Those are the ideas that is being put in over the past 6 to 7 days. So Chihin went up strongly. Artronic also continue to trend higher. Complete is higher. Eno, okay, softly gradually going up. Optimax is getting stronger, 136 towards 140. So overall, I say that our counters are quite interesting. And Ta'an is the one that under the plantation counter that provided a special dividend this round. And the dividends can be around, I think, 6 to 7%. Okay. Oh, again, someone said that the chart is not showing Aneka. So never mind, I just summarize Aneka again. I think so. What I'm saying here is that IPO price, it has hit around 37.5, 38 cents level. Right now, it seems like it is on a downtrend. It has fallen below the IPO price, and right now it's still hovering around the 17.5, 18.5 cents. Although it is over sold, there is still a chance that it can collapse before recovering higher. So what I anticipate to see here is that if it is able to break out above the 19 cents level, then our next target will be around the 22 cents. Okay, so just to summarize the whole situation in the market, it is very slow in terms of trading value and volume, and that is not a good sign for retailers or even for anyone market participants. It's not good because if there is no people supporting the market or no people participating in the market, therefore the liquidity is lower and it will create a lot of traps in the market. Then you might be entering at a position that you can't be able to sell because of the liquidity issue. And secondly is that going back to the tables, going back to what we have seen in the today's table of indices, the healthcare, you can actually avoid that because until the earnings can sustain for another 2 quarters, only people will start monitoring and buying again on curve counters. For transportation and logistics, I think that is the main gist of the market right now because everything is recovery mode. Transportation and logistics definitely will benefit in the first rally. Okay, I would say that the first beneficiary will be them on the recovery team. Okay, so that's about it. I guess I've come to an end for our M Plus Swiss highlight today. It's already 1:10. We are 40 minutes already for this session. Okay, so I will see you again next week, and trade wisely and trade cautiously throughout this period. And bear in mind, FBM KLCM might have a good window dressing period, so you can actually focus on the banking and also the plantation counters at least for this month. Okay, thank you so much, and enjoy your day going forward. Bye bye.